Good morning, traders. Welcome back to another video. We have done it again. Three successful trades right at the opening session, all of them winning trades, and this time we purposely took them all in the same stock. The reason why we did this intentionally is so that we can show you a strategy known as back-to-back scalping. This is when you scalp the same stock after watching and observing its price action, understanding how the price action moves, and getting better with each of the trades that you take on the stock during that trading day session. So, how do you do it? Well, first, let's go over the three trades that we took. The first trade, keep in mind, all of the three trades did take place on Netflix. The first trade took place at 6:40 a.m., which is just 10 minutes after the market opened in California. And the contract was bought one Netflix, April 21st, 327.50 call at 2.60. Now let's go take a look at that contract, the 327.50 call. Now keep in mind, team, in this video, my purpose is to show you why sometimes trading the same stock can be very beneficial, and also why when you are trading the same stock, you should, as an options trader, always move from one contract to a far better contract with a better strike and better time. I'm going to show you an example of it. So for this particular trade, our first trade of the day, we took this trade at we got in at 2.60, which was right here at the very lows at 6:40 a.m. So this trade took place right here when the stock bottomed at 316. We got in right here, and we pretty much sold right about here at 390. So this was a really good trade. We made $140 on this trade by selling it at 390, just at the very top. So this was a really good trade, team. So our second trade took place right over here on the higher low structure at 652. So we told our teammates that Netflix could be placing a higher low structure and also a potential inverse head and shoulders that could fire to the upside to retest this resistance line here. So we entered at 652 right here, and our entry on that same contract for the 327 call was at 3.10 this time. And we sold at 4.20. So what do you notice, team? The first time we got in at 2.60, we sold at 3.90 area, right? 3.70 to 3.90. And then the second trade was at 3.10, and we sold at 4.20. And then finally, to our third trade, you're going to see something different for our third trade. This is a very efficient strategy that you can use as an options trader. So instead of buying the same strike at 327.50 call, because this is a weekly scalp trading strategy, you don't want to buy something at 327. You don't want to buy 327.50 call when the option is now very far away from the money, and you can buy a cheaper strike for around the same level of premium that you were going to pay for the first one. So here's what I mean. Let's go take a look. You see how the movement of the 327.50 call is? Now let's go take a look at the movement of the 325 call and see how active this is. So in this particular trade, here's the movement of it. First, we told our traders in the live session, right here, we have many traders that are in the live session that are trading with us live. We told our traders that we would get in at 2.50, and once price got into 2.50, some of our traders caught it at 2.50, two of our traders caught it at 2.50, and the rest of us caught it at 2.60 area, 2.63, 2.65, 2.68, and this is around the level where we entered that trade. So at 8:40, we entered that trade at 2.63, and the contract went all the way up to 397 in just about 15 minutes, team. This trade took about 10 to 13 minutes, and it provided over 70 to 80% profits on this particular trade. So very powerful strategy where you can trade the same stock. And here's how you do it, team. All right. You observe the momentum of the stock during the opening market hours, right? because as a scalp trader, you can't really predict a scalp trade going into tomorrow's session, because the likelihood of price action remaining near that strike that you're looking at is going to be unlikely. However, what you can do is overnight you can look at the way the price action behaves. You can look at all the support levels around that price action the previous day session closes at, and you can make trades happen there by buying at support. You can see anytime 321.35 was regained, this stock became very, very strong, and that's what we traded every single one of those trades that we took. Right here, we expected a retest at that trend line. Right here at the higher low, we expected a breakout above that trend. Then right here, when we entered on this meltdown, the reason why we entered the third trade on that red candle is because when you see the stock market, the overall stock market prints a massive demand candle like that, a massive bullish engulfing right at the support, then you can be confident that Netflix is also going to get that same sort of momentum in the following candles, and that's what we saw here. So again, the strategies, two strategies that you can learn from this tutorial. The first one is how to trade the same stock back to back, with the benefits of understanding that you're getting in and out of the trade really fast. You're not spending much time in it. You're not remaining in the positions long enough. Another very important factor to mention is that you're trading price action. You're not trying to predict anything. You're just trading the momentum of price action, and that is what's really beautiful about this. Again, I really love scalp trading. You just want to be very firm with your levels. You want to have a firm stop loss. You want to have a proper risk management where you're not going in with too much size, and as long as you do that, you're going to do significantly well. This is the third day that I have made 3 successful trades right at the opening session every single day using these strategies. So the first one is you want to trade the same stock back to back, and you want to get in and out really fast so that you're not spending much time in those trades where you're exposing yourself to further risk. And keep in mind, traders, we're doing all of this live while our traders are also in the live session with us and are trading them with us. You can see we really are trading these live, and we're doing it on a consistent basis. So just to recap, what are some of the advantages of scalp trading? Well, you're getting in and out of positions really fast. You're not remaining in the trades. You're not exposing yourself to too much risk. You're trading price action based on the momentum of that given moment. And by doing that, you're basically trading price action. You know what's going on with the stock. You're feeling the stock's movement. And when you're feeling the stock's movement, you know exactly what's happening. And that's the most beautiful part. Again, we talked about how you can trade the same stock back to back. And the second strategy that's very, very important for you to learn as an options trader in this video is to always try a different strike. Once price action, if you're around like the 322 area and you're trading 327 strike, and price action is now down here, you're not going to trade the same 327 strike. You better be trading something that's closer at the money, something like the 325 or even the 322 strike. Understood? If you have any questions about this, please put them in the comments, and I will be more than happy to cover them for you. If you enjoyed this video, please give it a thumbs up. If you would like to see more of this and learn about scalp trading as well as many other price action based strategies that we use to profit from the stock market, subscribe to our channel. And if you would like to see these alerts live, these alerts that are getting called out, you can join our Discord premium in the link below for our stock option traders community, and we look forward to seeing you there. Have a wonderful, blissful day, everyone. See you tomorrow.